Good afternoon, everyone, and welcome to Stock Market Today. It's Allie, Coram, and Ken Shreve here with a look at the action in today's session, where we saw brutal losses across the board after a little bit of a glimmer of hope from the Fed in Wednesday's session. But Ken, it ended up being one of those Lucy with the football kind of days, but we weren't the Charlie Browns here.
No, we weren't, and I think yesterday's video we talked about the fact that it was like big gains for the market, strong rally after the Fed hiked interest rates, and but we said that just didn't seem like there was a whole lot out there to buy. A lot of stocks near 52-week lows that were bouncing 5-6%. So we didn't do much yesterday. In fact, we trimmed some more positions today on leaderboard, but sharp losses. Do want to talk about three stocks that are kind of flexing their muscle out here. There aren't many of them left these days, but Grocery Outlet, ticker GO, hit a new 52-week high today. Also, Ollie's Bargain Outlet, a discount retailer, acting well. And finally, United Therapeutics, which we talked about last week, but still like the way this stock is pulling back. I think it's worth revisiting.
All right, well, we'll get to analyzing those stocks, but first, let's analyze the major indexes. The Nasdaq today down 4.1%, the S&P 500 down 3.25%, the Dow off by 2.4%, and the Russell 2000 down a whopping 5.1% today, Ken. So pushing the indexes to their lowest levels in quite a while here. Some indexes losing a year's worth or maybe more of their gains at this point in an environment that is clearly telling us don't fight the Fed.
Don't fight the Fed, and get ready for an economic slowdown. But it's coming, and the market is still grappling with how bad the slowdown is going to be. But it's likely we'll be in some sort of recession. But yeah, the Nasdaq undercut recent lows. If we go to the weekly chart, we'll see if it's poised to, even kind of undercutting that last breakout area when it hit a high of 12,074. So this is a tough deal. I mean, with the performance today, certainly think a trip to the 10,000 level could be in the cards. May not get down that far, but like we discussed yesterday, there's just so much damage being done to this market. It's probably going to take a little time to fix itself.
Yeah, the Nasdaq pushing to its lowest levels in about 2 years here at this point. That's pretty sobering. And we have talked before the heavy losses here, and before the undercut of the May lows of this concept of three waves down. So if we have the first leg and the second leg going from the March highs to the May lows, a third leg here, if you're following market history, one of our experts, David Ryan, is saying that we could potentially be in for another 20% or so leg down. That could put us near the 10,000 level or the pre-COVID highs for the Nasdaq. So just one scenario that we're modeling here.
Yeah, and that's sort of what the technicals are pointing to. It's it's a market under distribution. Like I said, with the weakness today, certainly brings a trip down to 10,000 into the discussion. So we'll have to see. We could get a sign of strength before that, but we know the market's in a correction, and we're just sitting in cash and getting out of the market's way has been a good strategy for quite some time now.
Right, and we'll continue to remain open-minded and flexible. And even with all of the negativity, the silver lining is that there will be new opportunities ahead of us at some point. So the more that we can preserve our capital now and our mental capital as well, the more that we'll be able to spend time preparing and be at the ready when we do get the next leg up in the market instead of getting caught flat-footed.
Yeah, I mean, we've been discussing this strategy for weeks now on IBD Live every morning. A lot of our viewers and panelists have been raising cash in recent weeks, and I mean, there have been some short opportunities, but generally just kind of watching from the sidelines and letting the selling run its course is the best course of action from here. Hopefully, people have been doing that, but yeah, another rough day today, and it was we maybe look at the Dow Jones next, because that really didn't make much of an effort at all to hold the 30,000 level today, which was also disappointing.
Yeah, so that round number there,
Yeah.
a psychological level piercing below that. We can also take a quick look at the weekly chart as well. So the Dow coming down to levels from early 2021, late 2020.
Yeah, I mean, it's kind of like clockwork. See how it's kind of coming down pretty close to that last breakout area, just a little bit above it. But the Dow is certainly getting near a level where you'd expect it to find a little bit of support. We'll see. We'll see if it happens.
Okay, and we are also keeping tabs on the Russell 2000, like I said, down 5% today, on pace for a decline of over 8% for the week, with still one trading day to go, getting to its lowest levels in a long time, right before the 2020 election, it looks like. So continuing to erode there. And we also are keeping track of the 10-year Treasury yield, coming in a bit today, but after a very strong advance in the last couple of sessions. So your thoughts on what we're seeing in yields here? Maybe a bit of a short-term high. Is this what it's signaling to you?
Yeah, I mean, it could be. I mean, there was a lot of volume behind the drop in the 10-year yield yesterday, and there was more volatility today. And TMV is a ETF that we're holding on leaderboard right now, and you can see what I said. The volume when it reversed yesterday was pretty heavy. We saw more heavy volume today, and this was an outside day for TMV. So we took the opportunity to trim the position, lock in some gains. We're just holding on to a quarter position here, and we'll see we'll see how it trades. But it's likely we'll see more volatility in the bond market for sure.
All right. And now let's talk about grocery outlet, ticker GO, bucking the weakness today, up 4%. Strong volume as well, not only today, but in other recent sessions. This is a stock that that relative strength line is almost vertical, which is a feat in and of itself, and hasn't even come down to its 50-day line, recently finding support at the 21-day line in this advance since its last quarterly earnings report.
Right, and how many stocks have an accumulation distribution rating of A plus at this point? So this is kind of a shining star in the discount group. We've seen some, pretty good performance in this industry group of some of the dollar stores, DLTR, DG, showing relative strength. But it's kind of interesting because grocery outlet, obviously, it's a grocery store operator, and when you look at other names in the group or other supermarket operators like Kroger and Sprouts Farmers Markets. I mean, both of these stocks are really in rough shape. Yet grocery outlet is kind of hitting new highs here. So there might be a story that the market doesn't know about yet. But I love the relative strength this is showing. And when you look on the weekly chart, people are asking, well, is it extended at this point? And you can see it's kind of just coming out of this big, huge, long consolidation. So arguably, you could make the argument that it just cleared an alternate handle entry today. So some would argue that this is in fact not extended. Looking at the weekly chart, either way, it's a good one to keep watching, because a lot of the grocery store operators are saying they've been able to pass along these costs to consumers, and grocery outlet is in that boat. So should see decent margins and results going forward.
Yeah. Is it a good time to be making new buys in this market right now? No, but like you said, it's those stocks with those soaring relative strength lines, top-notch fundamentals, or top-notch technicals, I should say. It looks like the fundamentals here are trying to turn around. Forward-looking estimates look promising. An uptick in top-line growth, the strongest in quite a while here, Ken. So it looks like we are starting to see a bit of a turnaround for this company. These are the exact kinds of stocks that we want, like you were saying, at the top of our watch list, because it could lead in the next move higher if it can continue to hold up amid broad market weakness.
Yeah, that's absolutely right. I know grocery outlet. I know earnings in recent quarters have been hurt. I mean, this company is spending a lot of money. They're in the midst of a major expansion, opening up more stores. So some of these earnings declines can be forgiven. And in the latest quarter, you saw revenue up 10% after some sluggish declines and modest growth in recent quarters. So this could be a little turnaround story. And there's money, going into this stock. You can see on the weekly chart a lot of above average volume weekly price gains, and definitely a strong performer. Not many
Yeah.
of them these days.
Yeah, that's what we like to see. And we're going to take a look at a group peer here, and that is Ollie's Bargain Outlet. And on the weekly chart in Market Smith, you can see a listing of some of the stocks in the group with solid relative strength scores. But let's dig a little deeper and take a look at Ollie's chart, OLLI here. Somewhat of a bottoming base showing up on the weekly chart. Second week of gains, up about 6.5% for the week as it tries to turn around. It's gotten above its 10-week line. It's now gotten above its 40-week line, and some volume coming into this stock too, Ken.
Yeah, and this is also a turnaround story because you can see, and the turnaround hasn't quite happened yet, but it's it's got some recent quarters of declining earnings and sales, but you do have a big estimate for 2024. But this is a classic example of a breakout from a bottoming base. In other words, it's a base that formed when the stock was very far off its high, and Ollies is 40% off its high right now, but this one is still in range. It looks like still in that 5% buy zone. Risky buys right now in this current market environment. But Ollies is another one that is just showing tremendous relative strength. And you look at the daily chart, and you see that earnings breakout fueled in very heavy volume. The pullback was very brief, mostly light volume, and stock is still fighting a good fight here.
All right, another watch list name for everyone out there. And then last but not least, checking back in on UTHR, United Therapeutics, an explosive move not all too long ago in mid-May, a couple days before the follow-through day, and it's held up exceptionally well, I'd argue, since then, Ken.
Yeah, and a really bad day of selling in the stock market today. United Therapeutics closed up near its high. Really not much damage at all. I like the look of the weekly chart here. Really bullish move a few weeks ago, and just the very orderly declines in recent weeks. So just like the look of the chart here. It's got good estimates, good earnings and sales growth. One of the rare, profitable biotechs out there. Very big in pulmonary arterial hypertension, also doing some work in cancer. But United Therapeutics is a really nice looking biotech, and like the technicals here too.
Yeah, with that explosive move out of the long range, going back to late April of 2021, impressive. Let's see if it can hold above that level. Maybe now form a narrower base. The last one had a depth of about 27%. So maybe from here we can see a tighter base and a new setup for when we do see the market getting back on its feet. We don't know when that'll happen, but this is another one to keep on the list.
Yeah, very stingy about giving back gains, and that was a really explosive move 3 weeks ago, and just really has not given up much ground. It's been a very orderly pullback, and a lot of carnage in the market right now, but UTHR is still looking pretty good here.
All right, thank you, Ken. And I guess in closing, with a lot of negativity out there and losses in the stock market, headlines that are pretty grim, how do you stay positive in the current market?
Well, you stay positive knowing that you're kind of out of the market's way here. I will say that we were talking in the office today. The market seems to be going after a lot of oil and gas stocks now, even some coal stocks. So pretty soon, the selling is going to become exhausted. In other words, there's just no other sectors, no other industry groups for the market to take down. Oil and gas stocks are among the last left standing, but we're seeing some really high quality names. Yeah. lot of oil and gas producers coming, below their 50-day moving averages. We had to get rid of Occidental Petroleum because of a sell signal. So we'll see. But the selling will eventually become exhausted. We'll start to see renewed signs of buying, and that's why we want to just kind of keep paying attention now and look for stocks that have the potential to lead going forward.
All right. Thank you, Ken. And thanks everyone for tuning in. A couple of announcements for tomorrow. Not only do you have IABD Live to look forward to in the morning, but we also have Barron's Live at noon Eastern. Scott St. Clair and myself are going to be talking about sell rules, offensive sell rules, and lessons that you can apply to the last couple of months and to be prepared for when we start having more actionable trade ideas as well to help you preserve your profits and minimize your losses. You can check out the details on that at barrons.com/live. Again, that's happening at noon Eastern. And then we have stock market today. We're wrapping up the week right at the closing bell, and then at 5 p.m. Eastern on Stock Tales. My guest this week is David Ryan, and he is going to be going over his bull market prep checklist, everything that he is looking at to prepare for the next uptrend. So that'll be really insightful. Make sure you check that out on my YouTube channel, happening at 5 p.m. Eastern at youtube.com/Alissa Coram IBD. That's about it. Just those couple of things. So spend the day with us. As always, we love interacting with everyone. Check out all that great content tomorrow. We will see you then, everyone.